All right, guys, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to actually recap our 2021 year and show you guys that we named this channel correctly. We are Two Stupid Guys Trading Stocks.
I mean, trying to go for authenticity, right? If you like this kind of entertaining stock market content, you just want to kind of learn on our journey, give us a like and subscribe.
All right, with that, we'll get to it.
Two Stupid Guys Trade Stocks.
I like the facial expressions I picked on these pictures for us for this video for a thumbnail.
Yeah, I don't know why you're so unhappy. You're still up 19%.
I still underperformed the SPY, which is my metric. This is the first time I've underperformed the SPY in like 4 years.
Stop sucking, bro.
I know, right? I mean, it was a banner year for the SPY, right? Up 27%. Absolute insanity, right? The historical average for the SPY is about 10% per year. Mm-hmm. You know, this is Daddy Jerome Powell with his just like, money printer, that meme. This is what you get.
Yeah, it's weird because I looked at my historical performance too. I don't do well when something's trending. I do well when it's horizontal because then I make arbitrage trades constantly. And those are my banner years. It's really weird.
Well, this might be a good year for you. I don't know. That's kind of my inkling of what's going to happen this year. So this is a screenshot of my Charles Schwab, my main trading account as of December 31st. Finished the year up 18.78%. It was actually interesting. So it's come up since then. Unfortunately, the 2022 has started pretty strong for me between Alibaba and Discovery. See our multiple videos.
Multiple videos.
I actually created an Alibaba playlist for our channel.
Nice.
But, I got to put that 18.78% in context. And I actually found this article is interesting that they were looking at kind of performance of some large hedge funds. And, if you look at this, like my 18.78% would put me right above Citadel Tactical Trading, the infamous folks there that the AMC Ape Gang absolutely hate. Some of these, hedge funds did it phenomenally well. Senvest actually was, I guess, one that was long GameStop. So that's where they had a 75% year-to-date return.
Oh, okay.
But
I wonder what their historical performance is.
That's a good question. I did not look at that. Yeah, I did not look at that. But it was interesting that so many of these hedge funds are going to fall beneath like the performance that I achieved, and all of us are below what the S&P achieved. So there's only these top 4 hedge funds here that actually outperformed the SPY this year. That's crazy.
Wasn't it? Didn't Warren Buffett do that challenge?
Yeah, well, right. I mean, that challenge I think was more about fees. The whole idea there was that it was hard for them to give you a positive return at net of fees. Right. They charge a 2% and 20% fee, 2% of assets and 20% of all profits. Fortunately, a lot of these guys didn't make any profits, so you didn't have to pay that 20%, I guess.
Hey, Vinny, I'm not last.
No, Melvin Capital.
I'm actually 20. I misprinted. I'm actually 24%, but
yeah,
I'll take it.
All right. I mean, it is what it is, man. This channel is about documenting our best efforts and our like kind of journey in terms of getting better at investing and hopefully becoming profitable traders. So I actually recapped through my years. This channel's grown a ton since we first did this. I actually did this way back when. Someone commented on it the other day, but I kind of showed my historical numbers as far as performance. And it was interesting going through this. I did not realize that the S&P 500 CAGR was that phenomenal over the last 5 years.
It's been pretty ridiculous.
It's double the historical average.
Yeah.
Fortunately, I still beat that number, which is like I was impressed with 27%. Like I'm happy with that. If I could maintain that for a long period of time, it would be pretty impressive as far as like what my portfolio could grow into.
Yeah, no, that'd be great.
And awesome. Actually, I kind of did my total return over the last 5 years, and I think I'm up 340%, something like that. My total return over the last 5 years is higher than Kathy Wood's ARK Invest.
Is that with fees or without fees?
That was just the ETF itself. So I don't know how exactly the fees are calculated in that, but she was up like 186 or something like that, I think, according to what I saw on Google.
Nice. All right. So here is me. I'm honestly not really worried because these are all unrealized. I still have all the shares. It's just the 12-month gaps here. So basically, I have 750 shares of Fubo. That's where all this is down because their cost average at 30. So that's brought me down like 30% of my account. And then I also shorted the Q. Let me go in order here. All right, Baba, I have 150 shares, cost average at 149.
Yeah, up 7.8% in the last week, Dylan.
Yeah. I'm honestly, I'm not worried at all. I have 2 QQQ puts with a 350 strike at 630. I have 8 TLT puts with a 130 strike at 120. I'm up a little bit in the puts, and I think I'm break even on the TLT puts.
Okay.
It's at like they're at like right now we're at bottom.
Yeah, it's like 1.78% for the 10-year yield right now, and it's been nothing but trending up with like a rocket the last like couple of weeks.
Yeah, I'm waiting to hit like 50% and then get out.
Nice.
I have 7 Fubo covered calls. I just started doing that just to make like 150 a week, just slowly get back my Fubo gains because I was waiting for something to happen. And now that earnings is not close, I feel better doing that. I don't want to do covered calls around earnings.
Okay. Interesting.
Don't like it. So my biggest mistakes, I was too heavy on Fubo, clearly. I learned options this year. That's where all that pretty much went. I shorted the Qs way too early, and I didn't stick to long swings on good stocks. So, Vinny, what's that stock that was going up with EVs? I think there's a P in it, and they do batteries. They make batteries.
No idea.
Oh, this is gonna kill me. Someone's gonna point it out. Oh no! They went from like $2 to $71.
And you swung it?
Yeah, I swung it, but I didn't hold my stop loss. I
Oh, you canceled your stop loss. I forget what company that was. It was like an EV charging company, I think, right?
It was, yeah. Oh man.
Yeah, I remember the company, but I can't think of the name off the top of my head right now.
Hey, talk real quick.
Yeah, I mean it's tough, honestly. Learning options, I think, is interesting in that you have to then be right about the magnitude of the movement, that direction of the movement, and the kind of timing of the movement. So you have to be that much more correct when you're doing an options trade as opposed to just going like long a stock or something like that. So I didn't actually talk about it in a video, but I actually just used the options call credit spread to generate some. I had a bearish bet. Basically, I thought Netflix was going to drop. It was forming like a head and shoulders pattern. I closed that in a week for 70% profit. I was pretty happy about that.
I'm not gonna be able to find this. I'm giving up. All right. Someone's gonna comment what it is. I know what it is after this video.
Doesn't matter.
Pretty much I lost a bunch of money on shorting the Qs too early and that trade. And then I went back over my historical performance and I should just swing trade and not do anything else because that's where I make all my money. And every time I try to get fancy, I just get screwed. Yeah. But I gotta be honest, I'm not really worried about it's unrealized gains. I'm just holding on to the shares and doing covered calls. So I'm happy.
It's all funny because like I think it's when we break our pattern or our rules that we kind of get in the most trouble. So, I had that kind of underlying thesis with Alibaba where I thought I was gonna have a really good January, and then I still sold the covered call against my shares, and then like now I got to buy this thing back, significantly more than I paid. I got it for it, so I'm like, we just did a video on that one yesterday, but that's the breaks, right?
Yeah, kind of is what it is. I'm going to do more covered calls on my stuff, and then it was really hard for me to look at. Do you add money to your account every year?
No.
Yeah, my gains are completely off because I put in like $6K a year, so everything's ruined.
Yeah,
I was looking at my graph because like my initial graph shoots up. I'm like, there's only 1,500 in the account at that point, so that's not accurate.
Yeah,
I don't know how to compensate for that.
This is the main trading account. Actually, what spurned it was that I left the previous employer when I went to grad school, and I had a 401k there that I had to roll over into an IRA. So I rolled it over into a self-directed IRA. So I started with $20,000 there, and I've grown it. I think as of today, it's about 68.8 over the last like 4 years, 4 or 5 years, whatever. We started while we were in grad school, like trading, like back in that last 3 months of like 2017. I remember having some AMD shares back at like $20 a share that I was selling.
Which, if you stay tuned for the swing video, I kind of want to short. We'll get to that. So.
Oh, nice. I like it, man. I just freed up the capital because I closed that Netflix short on Friday, I think it was. For that
good, because I want to go long Netflix. Gain. That was another one.
Awesome. All right. Anything you want to show us on charts?
Well, we'll do that in the swing vid.
All right, man. Sounds good. Well, thanks for tuning in, guys. Let us know what you think about 2021 and how you guys did all below. I know some of you guys had some pretty stellar years.
Yeah, nice. Congrats, guys.
Yeah, catch you in the next one.